Yo, what's happening, people? What's going on? I hope we're good today. Just bringing in the New York session. Who we got in the room today? What's good? Yeah, man. Righteous Reject, what's good? Helen, how you doing? I hope you're well. Sack Trades, what's going on? PC Shed. Mr. FTD. Yes. He changed the name, man. Yeah, man. You changed it up. Wicked. I hope everyone is doing well today. You're not going to see much activity today, guys. This is why I'm doing this live stream. I'm going to keep it nice, short and sweet, because I don't want to bore you with the same information, considering that price isn't doing much. But this live stream is going to be a follow-up onto a video that I'm going to be releasing very shortly. Okay? So just wait for everything to load up. Not me. What's good, man? How you doing? Awesome love from you all. That is crazy. Magix, how you doing? What's good, guys? Sir Faber, can't even say it, man. Thank you very much, bro. A lot of you have been in the channel for quite some time, man. A lot of you, and that's why we'll always be here, man. Pattern watchers, that's the nature of the game. We watch patterns. We wait for them to play out. We don't get caught out, you know? And that's what we're here to do today. Okay, then, cool. So, let's get with the flavor, guys. All right? Let me just put this over here. And we can start having a conversation about what has been going on and what we are likely to expect next. Okay? So, over the weekend, there's not been that much activity. We had a nice little spike to the downside. And, of course, the CME gap gets filled. But in my video that I'll be releasing shortly, I'll be explaining why that's not really a big thing to be worried about. You know, gaps are something that you need to be mindful of, but ultimately it's what they're doing right now that we are really more concerned with. Okay? So looking at current price action itself, there's nothing happening, guys. All right? And the only reason there's nothing much happening because we have, in the next 29 hours or so, the FOMC press release. Now, just be mindful of your screens as well, guys. It might be a little bit bright on here. Okay, so I'm going to give you a second to just try and reduce the brightness down because I'm going to bring up another chart. Not a chart, sorry. A platform that I use quite a bit to understand what news plays are going to be coming out shortly. And that's in the calendar. Okay? Now, in front of you right here are the news announcements for every single currency pair, okay, that is traded. Now, the main ones are the euros, the Aussie dollar, Japanese yen, the Canadian dollar, and of course, the US dollar itself. Okay? Now, today's Tuesday. There's not that much happening. The Australian markets have got a bank holiday anyway. Okay? I believe that is from tomorrow. So we'll be down a pool of liquidity. But there's not been much activity today in terms of the marketplaces, in the sense where there's nothing that's come out that has really sparked anyone's interest. All right. We've got the consumer confidence, okay, which is a little bit of a market mover, but it doesn't really do much, okay? But tomorrow is the day, ladies and gentlemen, and in my opinion, I would suggest that you guys just sit back and wait, okay? Because you're going to get caught out with these news plays. News announcements are notorious for the markets to just explode in either direction. There may be a good news announcement and the price can drop before it resumes its trend back up, and vice versa. So today's stream is really going to help you understand what you are likely to expect when it comes to these sort of situations. Okay? So just so that we're aware, at 3 p.m. today, we'll have the Canadian dollar, well, the Bank of Canada, talking about its monetary policy report, okay? And the rate statement, and of course, the overnight rate itself, all right? Then, on Wednesday, at 7 p.m. UK time, we will have the FOMC statement, the federal funds rate, and the FOMC press conference. And then, of course, we will have the CPI quarter-on-quarter release for the New Zealand dollar, which could have an effect on the Kiwi yen and, of course, the Kiwi dollar itself. But tomorrow is going to be a big thing. Guys, forgive me, man. You know what? I actually did you a favor there. It wasn't that bright. What a boomer moment, guys. There you go. To anybody new to the stream, you have experienced your first boomer moment in the Traders Reality channel. That's what I do. You know? Wow. What a guy. What a guy. My bad, guys. My bad. All right. So yeah, you haven't missed out much yet because I haven't pulled up any charts. But anyways, so look, all these red little boxes right here are high impact information. Okay, and price action itself is reflecting that. Okay. So with tomorrow's news announcements, okay, and the day after, there's even more news announcements that could affect price action. Okay, you've got the unemployment claims, core durable goods orders. But what is the importance of these news announcements? Well, the only thing that I care about, not whether or not these are positive or negative results. All I care about is what price is doing right now to tell me that they are preparing for the news. And you can see bright as day. Okay, they are just trading sideways. Now let's look at the logic here. Okay, Bitcoin has taken a tank to the downside. All right, we understand that. It's been trading downwards. Everyone's like, bear market engaged, bear market, bear market. No interest. All right, because at a moment's notice, it could change and price could move all the way up towards 44K and everyone would believe that the bear market is out the window and now we're in the bullish market. Bear market, bullish market are emotional triggers for retail traders to make sense of what's going on, to relax the idea of their investment and say, you know what, because we are in a bullish market or in a bearish market, I don't know really when the entry point should be. Okay, so because everyone's bullish, I'm going to just go long. That's the basis of those two indicators there. Okay, they are emotional triggers. The things that we use in this channel are markup phases and markdown phases. Right now, we're in the markdown phase, and we understand the markdown phase will follow with a markup phase because the market maker has been hitting price to the downside. He's been building his longs whilst price has been dropping. And then, of course, if you look at this chart right here, you will see that there are tons of liquidation points in terms of leverage trading, lots of liquidation points for the shorts to the upside. Now you can see the delta is showing approximately in this area here. There was not confirmed, but it was implied that there was $6.4 billion worth of liquidation points for the shorts. Now you notice that the actual delta itself is starting to reduce. That could mean that people are now starting to not so much go short, but they're not really putting that much commitment down, which means the market maker needs to make a decision. He needs to move as fast as he can towards the liquidation points for the shorts to the upside, because if he doesn't, there you go. If he doesn't do that, guys, okay, there's a good chance that the shorts will start taking profit, and the market maker is not going to be in the business for giving people profit. He needs their liquidation points so that he can close his longs in profit. Because when you close a short, you buy it back. Okay? That's what happens. And the market maker facilitates that transaction. When you go long, he goes short. When you go short, he goes long. Now, if there's short liquidation points for them to attack to the upside, that's happy days for the market maker. Which is why the next 29 hours are going to be critical. Because if the market maker does decide to send price down lower even more, then he has just fooled the short retail traders and got them probably to commit more liquidity, which then we would expect another big reversal back up. Okay? Are you with me on this, ladies and gentlemen? Are you with me? Please let me know if I haven't, blown your head off yet. Because the price action over the next day or so is going to be very boring. And if there is any wild movements to the upside or to the downside, I mean, look, guys, look, it's 10 past 2. We usually see volatility coming into the market. Everyone looks forward to the New York Open. Look what's going on. It's not going anywhere. Let's bring up the book map to put things into perspective. Check this out. So this is the book map, okay? And this is on Bitcoin Binance Futures. I'm going to pull up Bitcoin on 5 exchanges. So we've got Bitstamp, Binance, FTX, GDAX, which is Coinbase Pro, and Kraken itself, all right? So check this out. If we zoom out we're going to have an understanding of where the liquidity is at. All right. Now, this is the order book liquidity. So it involves only limit orders, limit buys and limit sells. $30,000 at Bitcoin. All right. Sorry. At 30,000, there is 1,458 Bitcoin orders in the range. So 1,458 Bitcoin has come into the order book and is waiting to be taken. Does that mean Bitcoin's going to go down to 30K? Well, from the current situation as it is right now, from 36K to 30K, that will be a pretty big drop in my opinion. All right. Does that mean you go short? No, it does not. Because this is on the base that on the order book flow right here. It's based on these orders staying there. Over the next 29 hours, this red liquidity line right here may not stay red. It might actually start reducing in terms of color, and it will start looking like orange, or even turn yellow. It could even turn blue. So the darker the color, the more liquidity. Likewise, at 32K, you can see there's 493 Bitcoin in that range. Does that mean they're going to come back down to it? They could do, but it's all based on what they plan on doing based on the FOMC and what happens there. Because quite frankly, guys, I don't think it matters what the FOMC says about the US economy, okay? Because there's only going to be a couple of things that's going to happen. If we pull up the US Treasury Yields itself, okay? Now, this is important. If you look at the Treasury Yields, you'll see that right now they are reducing. That only means one thing. That means traders are actually putting their funds in government bonds because they need to, reduce their exposure in their assets or whatever portfolios they have. They're coming to the government. All right. Whenever you see this rising to the upside, it means that risk is on. Traders are now feeling risky. They want to start investing in riskier assets. Happy days. When it's pulling back, it means that they are putting their money to the government. So the government naturally is going to reduce that rate to try and offset people to not put the money there so that they can start putting it into more risky investments. That's just a general overview of the yields. And you kind of know where you are with that based on traders' sentiment. Now, I'm talking about stock traders, institutional fund managers, and what have you. Put aside cryptocurrency. All right. We then look at gold itself. Gold is looking like it's rising to the upside. So as a safe haven, traders are putting their money in gold because they are just not, they're concerned with the economy. They're waiting for the FOMC. They don't know what's going to be said. So they put it into a safe haven. Gold rises naturally in value. Okay. But what you got to be aware of is this. I'm of the belief that the market makers and anyone behind the scenes of trading is fully aware of what information is being put out. Call me crazy, but I've proven it many a times in previous streams. They're marking up gold right now, okay? Gold is rising. We know that they come back to the vector candles, and in the video that I've just done, it explains what I'm talking about right now, okay? Look at dollar yen. Dollar yen has come from a downside move to the a movement to the downside. Okay, it's fulfilled cyclical moves to the downside, and it's forming what we would understand a peak formation play in this zone. In order for this zone to hold, dollar yen would need to hold this range. And if it's building positions in relation to the news announcements, the principle would say that if the news is positive, then there's a good chance that dollar yen's going to try and come back up if it is positive. But that's all going to be based on what they do in this range. Because even if the news does come out and it is positive, we might get some scary price action where they spike up, spike down, and then they will bring things back up slowly but surely. Which is why tomorrow is very important. And I'm just saying to you guys, be careful with your trading. All right? Don't get caught out in trying to catch moves. Look, here we go. Bitcoin now is moving up. Is it really moving up? If Bitcoin's going to move today, I want to see it move at least towards the range daily high. Okay, so that will tell me that they're marking up shorts, preparing for a move down later on. You know, when we look at the higher time frame on the 4-hour chart, we're waiting to see if this is going to be the second development of the W formation. So here we go. We've got the first leg right here. Is it coming back up towards the 50 EMA to show precedence that it means it wants to start building more positions from this zone and mark price down lower? Principally, that's what we're waiting for, isn't it? Because you can see the blue vector candle right here. They haven't come back to it just yet. Price might just move price higher a little bit more, hit some liquidation points for the shorts, hit the resistance of the 50 EMA, come back down, recover the previous blue vector, and then start to develop what we would understand this W formation. But if they come back down and hit this blue vector and they continue to come down, then it would invalidate the pattern. When price is trading sideways, guys, you have to factor in all aspects of the chart. Okay? All aspects of the chart. Are we cool with that, guys? Here we go. J Powell. I will be dovish on Wednesday and Bitcoin will explode like nothing we've ever seen. You know what? This is something that I'm trying to get across to everyone. Okay? If you're in the position to do this, try it. Okay? But split your charts up. All right? Have Bitcoin over the next 24 hours or so. Have Bitcoin. Okay? Have the have gold. All right? And have the US yields, where possible, if you can get that. Well, it's not on the 5-second chart, but let me put up the hour chart right there. Have the yields up, and if I can get 4, yeah. And of course, so Bitcoin that, and dollar yen. Okay, let me change that to the yields. Okay, ladies and gentlemen, these charts right here, guys. Okay, are a snapshot of what you can expect traders and investors to do whenever there is a news play coming out. All right, it's really important that you focus on these charts, because what we're seeing now is Bitcoin is reacting to equities. Whatever happens in the stock market, Bitcoin's going to follow. Okay, and what we're trying to work out from now until tomorrow is the disparity between, if gold rises, it means that traders are seeking a safe haven. That would imply that the US bonds are starting to drop. Investors are putting their money to the bonds. The yields are dropping. Dollar yen would either start holding, okay, or dropping down aggressively because of the relationship between gold and the dollar itself. What will Bitcoin do? Because cryptocurrency is an entity to itself. Remember, people are starting to adopt it. That doesn't mean that people that are starting to adopt it are going to literally, you know, Bitcoin's going to move up when dollar drops, as much as it's traded against the US dollar. This is what I'm trying to establish, the disparity between everything. Okay? Now, if the information tomorrow is hawkish, now hawkish is it's a term used by the FOMC, well, a sentiment to imply that things are positive, and dovish implies that things are negative. Okay? If they're going to be marking price up, brightness, if they're going to be marking price up and hit these liquidation points for these shorts, okay, tomorrow will be the trigger. Straight up. Tomorrow will be the trigger. I mean, look, as it stands right now, there are no liquidation points, significant ones, in sight. I saw yesterday on Twitter people talking about $100 million worth of shorts got liquidated, or $100 million worth of longs got liquidated. That's nothing, man. That is absolutely nothing. When you go into this, you see it's 50 million there, 41 there. You keep going up. You got 50 there, 41. Look at this zone right here. We've got 85, 50, 79, 76, 93, and $100 million worth of shorts, liquidations or longs, whatever it was. You think that's significant? Nah, man. It's nothing. When you come down to the delta, it implies that there's roughly about $11 billion worth of short liquidation zones for the market to take. Which is why, if they are preparing for a move back up to the upside, the only reason that they would move higher is because the liquidity to the upside is present. Price has been dropping, so the sentiment is people are bearish. There's not that many longs in the range, although from now until the FOMC, they could mark price down lower, take some of the long liquidation points, or they could just completely run away with it and take advantage of the short liquidation points to the upside. Again, this game is not about who holds the most. It's not about who can call where price is going to go next or what they think Bitcoin's going to be priced at. It's all about where is the money, because leverage trading is massive. All right. If there's what, $11 billion worth of short liquidations, you're saying to me the market maker who provides this facility to trade, you don't think he's going to take that money? Of course he is. Of course he is. Okay? So just keep that in the back of your minds, ladies and gentlemen, when you are actually coming to the charts. Today and tomorrow, it's going to be quite rangy. And in the video that I'll be releasing later on, it's going to talk about, you know, understanding what we are likely to expect moving forward. Okay? Now that Bitcoin looks like it's trying to come up, okay? In my opinion, just be careful. We are waiting for the development of the 50 EMA hit so that we understand that they're trying to trap traders back up and hit some of the liquidation points for the shorts to the upside. If we look closely, you can see that in the near term, there is roughly, well, the nearest zone of liquidity would say there's about $50 million worth of short liquidation points at 37,633, which is quite far away. All right. And if we zoom in a little bit closer, there's not that much available. I mean, if I go in closer to the chart itself, are we going to see any closer liquidation points? Maybe, because it's on a lower tier. Give it a second. Here we go. Happy days. All right, then. So on the assumption that they continue with movement to the upside, guys, the nearest zone of liquidation points is short 25x. And there's $31 million worth of liquidations in that zone. Don't get it wrong, guys. There is always liquidation points being triggered, but these are assumed significant zones in the chart that they may want to come up towards. But what's got my attention is the fact that there's this gap right here and nothing's happening. You can see people are going long there, going long here. Okay, they came back down towards these liquidation points right here, which is $37 million and $42 million worth of long liquidations, but they didn't take them. Why aren't they taking these liquidation points? Yeah? Why are they leaving this liquidity here? Well, let's make the assumption. Let's assume that because there's over $11 billion worth of shorts to the upside, there's probably about, you know, say $1 billion worth of longs liquidations to the downside. So from a market maker's perspective, ladies and gentlemen, which would you go for? Would you leave the 1 billion to go for 11? Or would you stick around here at the risk of encouraging the guys who are in shorts taking profit, which means they'll be removing their liquidation zones. So the market maker's going to miss out. So at some point in the next 29 hours or so, guys, the markets are going to move significantly. And all I'm saying to you guys is just to be careful. You don't want to get caught out in leverage trades when price is doing this mad movement up and down to the downside and up and down. You get the idea. Okay. So who is the market maker? Is it a play? Is it a play of crypto exchanges that want to do? I will be liquidated, right? Okay, then it seems like we have a few new people in the stream. Mad love and respect for passing through, guys. At the beginners level, I mean, how many of you are actually beginners to trading, beginners to crypto? You know, say happy days in the chat. How many of you are completely new to the idea of trading? That's what I want to know, and that you are in this stream right now. Please press or say happy days. Jason Casper, what's good, man? What's good, bro? Mad love for passing through, bro. High block, yes, high blocks is the juice. It's the juice, but for some reason, their beta version, the alpha version, ain't kicking it for me, man. Waiting and waiting for it to run. It's just, I don't want to keep having to do this on people's charts, man. It's blowing people's eyes out, man. There you go. Happy days. Wicked, wicked, wicked. All right, then. So listen, okay? If you are new and you want these indicators, they are free of charge, guys. They don't cost you a penny, okay? The only thing you need to do is just install them into TradingView. So pinned to the top of the chat is the access to the Traders Reality website. Just go to the start here part and it will guide you through. Join the Discord, make sure you do the capture properly and that you follow the instructions in the first area of the Discord, because you won't get access if you don't do it correctly. Make sure you react. Okay, it's at the bottom. That's the channel. Subscribe, you get that game. And here it is. This section right here. You click here and it will take you to TradingView, where you must favorite the indicator so that it can put it into your section right here under indicators. All right. And then come back to it and you can get the TDI, which is this right here, which is a pretty posh, I won't say posh, but it's a different version of the RSI. Okay. And it's on the basis of utilizing volatility bands. Now, what I've actually managed to do is put vector candles in with the TDI. All right. which is something I'm going to be talking about with the guys in the masterclass. It's a little bit of a adaptation to the actual TDI itself. Someone was asking me about it, and I thought, okay, let me put the TDI in with the vector candle zones and try and establish the relationship between price coming back down outside the volatility band into the lows of the liquidation zones, and then not the liquidation but the liquidity points, and then why does it reverse away from that point. So that's something I'm going to be talking about. It's crazy what this does. Absolutely crazy, but free of charge, guys. Doesn't cost you anything. And of course the psychological levels, the vector candle zones, the volume bars, and the book map. The book map is free, but there is a premium version as well. Just Google it first. Go to Google and just search bookmap.com, and you'll be able to find out more about that stuff right there. Okay, cool. So guys, Bitcoin spiking up and down. Let's have a look at a few altcoins, okay, and then I'll love you and let you be. Okay, so here we go. Firstly, let's look at Ethereum. Ethereum, same behavior. What? Since when does Ethereum gap down? Since when is there ever a gap down in the futures? In the perpetual? Never have I seen a gap down. It's been a long time before I've seen a gap down in this chart. Same price action as Bitcoin. We are waiting for the 50 EMA for price to come back up to it, because I know that there are guys in here that are holders, okay? Now, for the day traders, it's a different story. We're looking at the 1 hour chart and the 15 minute, 5 minute, 1 minute, and the 1 second chart if you're really brave. Okay? For the holders' perspective, if Bitcoin is going to go up, or even Ethereum is going to go up, we need to pass significant points in the chart to understand if they are going to move from that zone. I'm hoping that Ethereum can come back to the 50 rather than the 50 EMA going to the price. Because if the 50 EMA moves to price, that tells me there's no volatility. So that means we're waiting for momentum to come into play. All right? But if the price can move to 50, then that it tells me that there's something going to happen. They're either going to reverse back down, hit the previous liquidations, hit the zones with the liquidity zone right here, and of course take some liquidation points for the retail trader that got stopped out, okay, on the move back up, induce some longs to come in, hit those long liquidation points, and then form the development and the final stage of the W formation, which would see price move higher to the upside. But we need to wait for that, and that's what I'm talking about in relation to today and tomorrow. You've got to wait for those news releases to come out so that the chaos in the market can be finalized, and then we can get back into trading. All right, let's have a look at some altcoins, who's doing well and who isn't. Okay, so we've got Zilliqa. Okay, then Zilliqa's coming up. That's a nice little move towards the 50 EMA. Be mindful, guys, with the altcoins as well. Pay attention to which altcoins are trading below the 50 and the ones that are trading above, because if you look at the total market cap itself, okay, you can see on the altcoin market itself, majority of coins are coming back up towards previous zones of liquidity. All right, so there may be a small little W formation here that people may be able to exploit on the 4 hour time frame. How long it lasts for is a different story, guys. Okay, going back to this chart right here, and we pull up the 1 hour time frame just so we've got a clear review. There you go, look at that, coming away from the psychological ranges. There are a lot of altcoins right now that are coming away from the assumed psychological ranges in the crypto market cap itself for the altcoins. So you want to go find coins that are trading away from this range. So here we go, FTM, where you at? Here we go. Perfect. Trading completely away from that range. It's gone above the 50 EMA on the 1 hour time frame. It's now testing the 200 and the 800 EMA. This is a really important zone, guys. All right. Very important. You can see we've got a lovely W formation right here. Again, back to the explanation of why this pattern is important. You notice how the first leg brings price to the downside. All right. They come back up and hit the liquidation points for the shorts that got trapped in this area here. They make the retail trader who believes that the zone right here is resistance. So those guys go short yet again. Market maker spikes it up, hits those short liquidations, then brings price back down again because it's trading below the 50 EMA. And then the market maker initiates a move to the downside with aggressive movement to trap more traders to go short. And then he reverses back out to take out all of their liquidation points in this range. Again, it's all about the liquidity flow and when they're likely to take it, and we can only make that assumption based off the way the candlesticks present themselves. You see, the great thing about high block is it tells us where the liquidity is at, but the candlesticks will give us an understanding and the result of the market maker's intention to go to those zones. For example, trading above the 50 EMA, 5 and 13 EMA are trading upwards. There's a little bit of expansion in the moving averages themselves. That implies there's volatility coming into the chart. Now we're coming up to the 50 and the 200 and the 800 EMA on the 1 hour time frame. What's Phantom going to do in this zone? The range daily high is in sight. We could see a little bit of a breakthrough in today's session, but it may have to come back down to retest the zone, okay? And then, of course, we've got the FOMC tomorrow, which that could take precedence and price action could stale and go sideways for a little bit, okay? So just keep an eye out. As long as they're maintaining the 5 and the 13 EMA, it would imply that momentum is looking to move price higher, okay? Curve, nice little DEX coin itself. Here we go. So we've got a nice movement. We've got 1, 2, and slightly third hit to the low. It's a variation of a W formation right there. We've got the pools of liquidity right here that they are likely to try and come back up. But if you notice, guys, the range daily high and the range daily low is quite close to each other. So there's not that much of a range for them to move away from price. Okay? Not that much. Next, loop ring. The loop ring's come back down. Now it's tested. This is what you want to see. So Phantom is moving higher. Loop ring's pulling back now. So this is what you want to see. If you see this, look at this. If you see price coming into the 5 and the 13 EMA on the 1 hour time frame, this is for my day traders. If you see that happening, right, it means there's going to be a shift in momentum for the current hour and chart. So over the next couple of hours or so, we will know if they're going to resume their momentum, if they can get back up above the 5 EMA. If it violates or breaks the 13 EMA, you are looking to go on the lower time frame, and you'll understand that on the 15-minute time frame, the 50 EMA is the 13 EMA on the 1 hour. Okay, so in other words, if they can break down below the 50 EMA here, expect to retrace back up. It's at that point right there where they will resume the trend and the test off the 13 EMA right here. That's really important. Just that logic is going to help you understand whether you keep trades open or not, purely off the basis of whether the 5 and the 13 EMA maintain momentum. Because if you remember when Ethereum was trading below the $1,800 mark, when it broke that zone, that was the same time around the 13 and the 5 EMA on the 1 hour time frame started to expand. And then all the way up to the all-time high of Ethereum of about $4,000, $4.5, whatever it was, the 5 and the 13 EMA continuously were trading away from the 50, and they were maintaining a nice deviation, a nice spread away from each other. And every time price came back to the 5, it just bounced away off it. So keep an eye out on that with coins that you may be trading in the future. Okay? VRA. Let me have a look at VRA for my guys on Twitter. Here we go. USDT. Oh, Veracity, sorry. Here we go. See, VRA is forming. See, thing is, it's in the psychological range. That's a problem for me, because it tells me the market maker in this coin is still building positions. What is he building? It's a different story. Are they building shorts or are they building longs? Where are they moving price to, okay, and not doing anything about it? Yeah? That's the question that you've got to ask yourself. There is a state of equilibrium in the charts, in all assets and all coins. If they keep hitting the highs and pulling back, well, at what point are they going to break out from that zone and move higher? If they keep coming to the lows aggressively but not breaking down lower, well, what can happen next? Naturally, you would assume it's going to come back up and test key moving averages. The key moving averages are points in the chart where there are liquidation points. There are also orders for people to set longs to go higher. People set shorts to go lower from. Okay, there is always liquidity in the chart. And our goal is to try and work out if they're likely to hit it. Okay? So, guys, listen. Bro, you didn't have to pay that much, man. Jason, you did not have to pay that much to ask me that question, bro, man. God bless you, man. Would you ever be down to do a YouTube collaboration? I'd be down for that, man. I would be down for that. Would the people welcome that? That's the question. The pattern watchers, would you welcome a collab, a collaboration with Jason? I believe so. I'd be happy to do that. Not because you gave me $500, bro. You could have just super chatted a much cheaper one. You could have just messaged me, man. You didn't have to do that, brother. Mad love for you, bro. You did not have to do that, man. But God bless you anyways, man. Yeah, I'd be down for that. I'd be down for that, man. All right, then. Next. Couple of more coins and I'm going to leave you be because I got to go and get my daughter. Here we go. Cadena. This is interesting. There you go. The people have spoken, ladies and gentlemen. Jason, people have spoken, bro. So I'm going to have a conversation with you at some point so we can get that rolled out. But thank you, man. You did not have to do that, bro. Would have been cheaper if you just put a couple of dollars, man. That's what it's for, man. But thank you anyway. Okay, then. Cool. Look at Cadena. We're seeing a little bit of movement, guys. We're seeing a little bit of movement. But what I'm saying to you guys is just be careful because it's not... It's the FOMC's coming, man. You know, this is designed to keep people who are impatient to commit liquidity. All right? If you open trades based on movement that you're seeing right now, make sure you pay yourself. All right? It's not about how long you can keep a trade open for. It's how much money you can earn, right? And how soon you can pay yourself so you can get back into a new trade. Never have the mindset of lack, ladies and gentlemen. Never have the mindset of lack because there will always be an opportunity. Okay? All right then. Listen, I'm going to be doing this video for you. I've got the video completed. I'm going to be releasing it out later on. Mad love and respect to anybody new passing through to the channel. Jason, God bless you, man. You didn't have to do that again, but thank you very much. Guys, reach out to Jason as well. Go and subscribe to his channel as well, man. It's all about helping each other. But we will have a conversation about that collaboration. The people have spoken about it. Happy days. We'll get that sorted out for everybody. But I'm going to love you and leave you guys. I've got to get going. And just a quick one as well, guys. If you are considering joining the Patreon, please don't. Because it's coming towards the end of the month and they will double charge you. So please don't do it. And if you do decide to do it, thank you very much. It will be an experience for you, but do it at the start of a new month. Do not join before now because they're going to charge you twice, man. And that's not the game that I'm in. I don't like that. Anyways, mad love and respect to you. And I will catch up with you guys later on tonight, 10 p.m. to bring in the result of what has happened today. Take care of yourselves, guys. Peace.